How's it going, guys? Welcome back to another video. Thanks for tuning to Stock Essentials. My name is Alex. We're going to be going over Alibaba stock and why it still has tons more room to grow for the future. The past few months, it was actually in a really nice downtrend. In the past year, in fact, it's still down 45% in the past year. All-time highs was around like $310 per share. 319, almost 320, 52-week high. So we're sitting still half that price. So there's still a lot of recovery that Alibaba can still do, even though we're up past month 10%, hitting all 52-week lows of $138 per share, with a nice recovery back up to almost $170 per share. So a lot of people are really happy that Alibaba is finally breaking out this downtrend. And if we go to the charts right here, we can see that it was in this nice channel for quite some time before breaking out of it, which is very good for Alibaba as well as Alibaba stockholders. So there's a lot of good stuff happening with Chinese stocks. Lots of recovery, and this is happening with other Chinese stocks such as NIO, another popular stock. But Alibaba has a lot of potential and a lot of room to grow. As you can see, it's been getting hit pretty hard the past year, down 45%. And if we get back to all-time highs of $320 per share, you could be basically doubling your money. So when everyone was getting all fearful from this nice downtrend, especially stuff with all the Evergrande and the Chinese government, a lot of people were fearful of Chinese stocks, especially Alibaba, and they sold off their positions. But a lot of people ended up buying those dips because remember, Warren Buffett's most famous quote is being fearful when people are greedy and greedy when people are fearful. And his longtime other billionaire friend, Charlie Munger, actually doubled down on his Alibaba position when Alibaba was around $150 per share. So he's seeing some really nice gains in his position right now. But there's still tons room left for Alibaba to grow. As we can see here, all-time highs, $320 per share. Very good company. It's basically the equivalent to Amazon for China. And what they're doing is they're actually confirming that they're developing in-house advanced chips to boost their cloud computing business, which is pretty big for Alibaba. They're trying to match Amazon as closely as possible, and especially since we have a semiconductor chip shortage, this is definitely going to be a very solid investment for Alibaba to develop their own domestic chips amid this pandemic right here. So Alibaba, really good company. As we mentioned earlier, they do a lot of stuff similar to Amazon, a lot of e-commerce, as well as cloud software, computing. So they're very closely related there. So we do think that Alibaba is a great company for the long term. It's definitely not going to be going away. And a lot of people, when they were fearful, you got to be greedy sometimes and pick up some shares of Alibaba. Even though it's up 10% in the past month, it's still a really good buy in my opinion. Lots of room to grow, and for the long term, you can see your money doubling and potentially even tripling if you're holding for the long term and you wait a few years. So that's about it for this video. If it helped in any way, please leave a like, comment down below your thoughts are on Alibaba, and of course subscribe if you're new to the channel, helps out a lot. Thanks for watching.